Hey, it's Kyle, and today let's talk about why tax refunds make no economic sense and how it's ultimately costing you money. Humans are irrational creatures, and if you're an alien watching this, that might be surprising. But to everyone else, no surprise there. Tax refunds are one of the biggest legal scams out there. Since tax season is coming up, it behooves you to know that receiving a tax refund is actually a bad thing. Let me explain. When you pay taxes, meaning your employer withholds money from your paycheck every 2 weeks, you are effectively paying taxes throughout the year. And many times your employer looks at your W-4 and other tax forms to calculate how much to withhold. Then off that money goes to the IRS. This creates errors, and it happens all the time. That means more money is taken out of your paycheck than is actually required, so you pay more in taxes. The IRS will sort this all out after you file, and if you paid too much, you'll receive a refund. To the average person, a tax refund looks and feels amazing, but it's not. What's actually happening is that you're lending the government your money without receiving any interest. Ever heard of the phrase, time is money? Well, not in this case. The government has this stockpile of extra cash it has received throughout the year, and they're putting it to good use. Free money for a year, and they don't have to pay interest on it. The average American receives $2,700 in tax refunds last year. That's $324 billion the government used to do whatever they want with it. Imagine what you could have done with $2,700 throughout the year. Many of you would spend it on your mortgage, rent, car loans, all those other things. Maybe you had a medical emergency and you sure as hell needed that extra $2,700. So what's the remedy here? Tax refunds exist because of errors in paperwork and accounting. That's unavoidable at such a large scale. The fact we receive no interest on that money is preposterous. We should at least receive the same interest based on the 1-year treasury, which as of this script is 1.58%. Of course, the higher the better. Whatever the interest rate is on December 31st of that tax year, use that rate. That means if you receive a tax refund of $2,700 for the 2019 tax return, you should receive an interest of $43. It's not much, but it's still a return on your investment. So why do people love tax refunds so much? Which would you rather have? Money back or having to pay more because you didn't pay enough at the beginning? Let's make this easier to understand this irrational flaw in human logic. Let's say you see an iPhone you want that is listed for $800. You pay $800. But because of some glitch in the system, the iPhone actually costs $900. So you underpaid by $100. A year later, Apple tells you of this and asks for that $100. Of course, you'll feel ripped off and mad. The same scenario, but different outcome. An iPhone is listed at $800 and you pay $800. But because of some glitch, the iPhone actually costs $700, so you overpaid by $100. A year later, Apple tells you about their mistake and refunds you $100. You're happy to get the refund, so you spend it on headphones or something. In our first example, you underpaid for something and got to keep that $100 for an entire year. If you had a medical expense or something serious like that, you'd be happy to have $100. In our second example, you overpaid for something, so that meant Apple got to keep your $100 to reinvest in their company and then pay you back without receiving any interest. This, my friends, is called the prospect theory. You're purposely preferring a suboptimal outcome because it feels better. Now, if Apple had given you that $100 refund plus interest, then yes, that's a better option. But in the case with Apple and your tax refund, you're not getting any interest on your money. In fact, if you receive a tax refund a year later, the value decreases by about 1.75% due to inflation. Aside from the fact you're not receiving a return on your so-called investment, you're actually losing money. What you can do to avoid this is to owe taxes at the end of the year. That means you're underpaying the government and you'll have a whole year until tax time to use that extra money to pay for expenses. Then when tax time arrives, you just pay the amount you still owe. I'm no tax expert, so please check with your accountant on how you can owe taxes during tax time. Yes, this may sound counterintuitive, but really think about it. Our brains are wired to like refunds, even though it's actually costing us. I once bought a toilet that had a sticker price of $120. But if you submit a rebate within 90 days, you'll receive $30 back within the next 90 days. First, not everyone will fill out and submit the rebate. Second, for those that do, it'll still take an additional 90 days to receive the $30 refund. That's $30 per customer that the company could use to reinvest in their company to make even more money, and then give it back to you interest-free. But we're cool with it because, hey, it's a refund. I'd love to hear what you guys have to say, so leave a comment down below. How much did you receive as a tax refund last year? Remember to subscribe and turn on the notification bell so you stay up to date when new videos come out. And lastly, if you're interested in behavioral economics, loss aversion, prospect theory, and more on how our brains act irrationally, read Thinking Fast and Slow by Nobel Prize economist Daniel Kahneman. I'll leave a link down below. Until next time, don't pay all your taxes.